The internet is telling you you can just trade the footprint chart just by reading what is here. But actually you need to make it small and identify where you are. Because if the market has a contraction phase on the left side, it will mess your trading up and you will lose a lot of money. I'm going to give you in this video one trading strategy using the footprint chart that I use also in my mentoring program with my trading students. And it works pretty well. And we're talking about that to use the footprint chart. A 3000 trades chart, very important. Some trading platforms cannot comprehend, but now TradingView has it, and Zero Chart also can do that. And when you put it a 3000 trades chart inside, make sure you activate the VPOCs. The POCs are just like volume point of controls, and it means that the most volume where it was traded, you will see there a white dot or whatever you were setting up. And if the VPOC is going in one direction, as you can see here, goes down and shifts the first time up, it's called a VPOC shift. And this is a trading zone. And in these trading zones, I love to read the market using a 1 minute chart, for example, because it shows us very strong signals. For example, as of now, we have here a contraction phase on the left side. And usually the market wants to go back to these contraction phases. So if you ever use the footprint chart or any other chart, make sure always to look at the whole day what the market did. What is your first impression and your experience where it makes sense to you the market goes. And when it makes sense to you, for example, that the market goes down here, now we zoom inside using the footprint chart, and you can see here using the 3000 volume chart that the VPOC goes from here to there up, higher, 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 and the first time was going lower is here. So now we have a trading zone from VPOC to VPOC, and this is called a VPOC shift. Now when looking here where my mouse is, this is a specific area. Because here was the VPOC shift, both candle needs to be closed, and then we can draw in an area. And now we will go to the 1 minute chart, and I'm going to show you what I mean. There are two ways how to trade it. Either to make here a blind entry, having the stop placement above this negative candle, or just going in a 1 minute chart, because that's something what I really prefer, and just taking any small red candle or color switches. So as you see here, there's something that's called a rejection wick. A rejection wick is just like a wick that is obvious in reference to other wicks. So trading maybe this rejection wick here in this trading zone, or maybe because there's a positive candle, what means like in reference to the market closed here, right? Check this out. Market closed here. Market closed here, like we're talking about the candles. The 1 minute chart closed here. That means like this was going higher, it's like a green candle, was going lower, it's like a red candle. So now stop placement here, entering after the red candle, and then aiming for the middle of this contraction phase will give us a risk reward ratio of 5. That means when risking $100, we have $500 and take profit. For every trade we can replicate that. What is just very important, keep in mind, it's better to have, from my opinion, 7 losing trades and 3 winning trades. That means like maybe losing 7 times $100 and making 3 times $500. That means like 3 times $500, those are $1,500 of win. And then minus the 7 losing trades, we still have $800 of win. And this is something what's very important when it comes to trading. Quantity beats luck, high risk reward ratio trades, using a 1 minute chart, and something like the footprint chart. I use also something that is called here the volume profile. I love to use that as specific stations. For example, like if I can see the market goes down, I can see using the volume profile now here, for example, here one mountain and here's another mountain. And these mountains help me that even though I see that the market wants to come back to this contraction phase here, that the market will have a hard time to go from mountain to mountain. So actually it's now about reading what the market does and not too much what I'm expecting from the market. This is what reading means when it comes to trading. About another thing is also with the volume profile, this is called high volume nodes, these mountains, and low volume nodes are where not the mountains are. Like this is where the tallies are, like the alleys. And the thing is where you can see the low volume nodes, like where those holes are. Either the market goes here in other contraction phases, that means the market will spend a lot of time, wiggle around, will be a hard time to trade, by the way, also in these kind of zones. Or the other thing is it will go fast through it. So trading literally up here, where you see my mouse, where we just saw the VPOC shift, taking the red candle or just this rejection wick in consideration, trading down to the trading zone, can be a very nice trade. I will show you now another example also using the footprint chart, because I think that's something what is absolutely cool. We can use it also on the opposite side, because we have here the contraction phase. You can see the market structures up, and then first looking inside the footprint trade. But instead now we will go now to another day and something what is on a training day. And this is something what I really love. I'm always preaching on this YouTube channel is to use just a usually square. You can use this on any trading platform and to measure how big were the retracements, such as from here to there, and how big were the phases where the market was shooting up like here. So we can expect if the market was shooting up within this length up, and then also within this length up, look here around the same movement, and then the market here has a hard time. So that means if the market starts then to go again in a contraction phase, does the same retracement like you see here. The same retracement just happens as you see here. And this is what it's called reading the market, because it's like, what did the market just do a few minutes ago or a few hours to expect the markets will do the same? And then when you look down at the VPOCs here, while the market does the same retracement, check this out. VPOC goes lower here, lower, lower, higher, right? Like that's the VPOC shift, but it's not the retracement that we want. Now it goes lower and higher. And you can see the VPOC shift here is very aggressive. When you compare this VPOC shift and that VPOC shift, this VPOC shift is way more aggressive. Now when drawing in a zone on this area where this candle is opening, and then now going into the 1 minute chart, because very important, this negative, the positive candle needs to be closed with the VPOC shift, then drawing in the trading zone. Then we look now into the 1 minute chart, and we go to this day. You will see, and this is something what's absolutely cool. You will see here just some color switches, or like how the market will rotate here higher, and then the market pushes out. But keep in mind, always to use this, because of the US market, we traded also on the US session. So you can see here, this is the VPOC shift here, and then you can see here this trading zone, and then how the market literally structures here higher, and then just like makes your nice color switches. Very important, because this is pre-session, it looks kind of sort of trashed. So I'm going to give you one more example, and this will help you for your trading out, especially if you are somebody who loves to use the footprint chart. For example, like here, don't just read here the footprint chart like that, even though you read a book or whatever you do. Like, read what the market did here. Understand that the market does retracement within this length. This is crazy. Like, check this out. Look here. This length here is the same as this length here, what the market did. So just like around, I would like adjust it to this one, because that's like a medium. Also, like from here, you can see it's a small, was going bigger, was having here the same thing. This is just like a spike. I would not consider it. I would just like say, okay, that's like an average movement. And now check this out. When the market does here the same movement, tack, as you see here, checking out where is now here the VPOC shift, we can use it on trading up. But if we see, of course, you're trading down, then it would be better. For example, like if you see the market structures down very aggressive, then just like on the opposite side, like how big were the retracement, like from here to there, was the same like from here to there around, right? I would just make this one a bit higher. I would take this in consideration, because the third retracement we see was also a bit bigger, as you see here. Can you see that? So when taking this retracement and this retracement consideration, of course, it would make sense to trade up here. Also, in this case, also up here somewhere. And then we're looking here for VPOC shifts. VPOC shifts such as, for example, market goes up, higher, 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 lower one time. Then we have here the VPOC shift. And then here taking the VPOC shift into consideration here where my trading zone is. So we're going now into the 1 minute chart, for example. Here, by the way, we have it too, like goes up higher, and then it goes here, wiggles here back and forth weirdly. And then you have a nice VPOC shift first starting here. Here you can see a lot of VPOCs are going down lower. Here you have a VPOC shift inside. It comes with experience. You need to see it multiple times on the market. It cannot be that you're just watching a YouTube video and just assume like it will work. Of course, you need minimum to watch this for 2, 3, or 4 weeks. Maybe like once or twice a week is totally fine for 1 or 2 hours. And then you just punch in this chart, the 3000 trades chart, and then seeing this on the market. Using the footprint chart, this was the 16th. So we're going to the 16th now. Now we're checking this one out. And here, as you see here, I was drawing in the VPOC shift. Keep in mind, you can watch this video over and over again, like that you can also go back. And here you can just see the rejection week that we're talking about, or just like a color switch, green and red candle to trade. And take profit here, risking $100 on average, getting risk reward ratio of 4 in this case. Or for example, what I also love is just trading then the red candle of the color switch, not even placing the stop up here, risk reward ratio of 6. You can see here risking $100, getting $600 and take profit. Or trading the rejection wick here, risk reward ratio is even 8, what's absolutely cool. Hope you can take something out of these videos, and then wish you all love, good trades, JT out.